Hello friends, in today's video, let's look at how to account for the cost of a land and building that a company or an entity buys in three different situations. Hi, my name is Pratheej and welcome to Deep Dive into IFRS. So let's take two main situations, with the first situation having two sub-situations. So in the first situation, an entity to whom IFRS is applicable is going to purchase a land and building. Owner of the property tells that the entity has to pay $100,000 for the land and $25,000 for the building. Now in the two sub-situations, the first sub-situation, the entity is going to demolish this building and use the land for constructing a factory or maybe a marriage hall or convention center or something like that. This second sub-situation, the entity is going to use this building for its office purposes for say an year or two, and after that demolish that and then maybe use it for some other purpose as the entity deems fit in future. So how to account for this $1,25,000 in both these sub-situations? So in the first sub-situation, so here what we have to look at is the intention of the management. So the intention of the management is to acquire the land and not the building. It just so happens that the building is there on the land and it has to be acquired along with the land so that it can be later demolished and a convention center or a factory or a marriage hall can be constructed on that land. So as the intention is to acquire the land and the building will be demolished right after acquisition, this whole 1,25,000 should be capitalized as land and not land and building. And suppose the demolition cost for this building comes to around $10,000. Even this has to be capitalized as part of the land cost. So the total cost to be capitalized as land should be $100,000 plus $25,000 plus $10,000, which will come to $1,35,000. Now the second sub-situation, the entity is going to use this building for some time, an year or two. So the $1,25,000 paid should be split as $1 lakh to be capitalized as land cost and $25,000 to be capitalized as building cost. In the future, as and when the entity decides to demolish this building and use the land for some other purpose or maybe construct a new building there, this demolition cost should not be capitalized. It should be expensed to the P&L account. Now the second main category deals with an entity's compliance with its social obligation. Suppose an entity decides to construct a factory in a rural area, and just imagine that there is no hospital in that locality. So the entity decides to construct a hospital as well and hand it over to the local authorities. After this, the entity will not have any rights or control over that hospital, and this hospital will be used by its employees and the local population. Suppose the cost of constructing this factory comes to 100 crores and the cost of constructing the hospital comes to 5 crores. So should this 5 crores be capitalized as part of the factory cost? Now, even though 5 crores is a sizable amount, as such, that is not required to bring the factory to its working condition. So looking at it from that point of view, this should not be capitalized. But not just this. In a case like this, the intention of the management has to be checked. So suppose this was done as a voluntary act, as part of its CSR initiative or as a donation. So in this case, even though the 5 crore amount is a sizable amount, this has to be charged to the profit and loss account. It should not be capitalized. I hope this video was useful to you guys. Till I see you in my next episode, thank you for your valuable time.